Ajay Bodke, who's joining us from Prabhudas, Lilladher. Ajay, let's just run through some of the factors that you're watching out for currently. Our market's kind of in no man's land at the moment, given that the absence of any major cues.
Good morning. I think the third quarter numbers that are out till now are slightly better than what the market expected. As we went to the third quarter earnings, one of the biggest concerns was the overhang on the banking sector and sort of the kind of provisions that the banks would have to take for the 150 accounts that the RBI had flagged off. But I think the Axis results were the turning point because as Axis clearly stated that even if you were to account for the entire provisions for the 150 accounts that they were exposed to, it only amounted to 1,000 crores, and they completely provided for them in the current quarter itself instead of waiting for over 2 quarters. Now that sort of allayed the apprehensions in minds of many investors who were concerned about the corporate focused banking sector. The retail banking focused banking sector anyway was doing extremely well, as was evident in the numbers trotted out by both IndusInd as well as HDFC Bank. But the concerns were mainly on the corporate focused banks. We've got to wait and see the numbers of the other private sector corporate focused banks like ICICI and Yes Bank, which should be out very soon, and also some of the large public sector banks like SBI and BOB. Also, I think insofar as the global factors are concerned, there are 2 very positive news flows that one is hearing overnight. One is, I think, the announcement from China that they will be looking at shutting down 100 to 150 million tons of steel capacity. This steel surplus is the glut is flooding the global markets and causing unprecedented problems in many of its trading partners. So as soon as they shut down this large capacity, I think that should provide some sort of a stability to the steel markets. And secondly, I think even the announcement by the Iraqi oil minister that both Russia and Saudi Arabia are contemplating to look at their oil production, and if necessary, I think they would respond to the large glut that one is seeing. And one also has seen Kuwait cutting down the oil production. So as long as one as soon as one starts seeing stability in both these markets, the industrial metals market as well as the oil markets, some sort of a bottom one can expect for the global markets. And India, I think, as we all know, is the largest beneficiary of the fall in the commodity prices. Our macroeconomic fundamentals are one of the strongest. Growth is one of the highest. So I think one will start seeing large amount of FII flows coming back and gravitating towards India.
Fair enough. Ajay, you, in terms of some of those factors, I mean, you also spoke about the banking pack in terms of domestic cues. So I want to get a closer view on that from you. We're watching out from some big ticket earnings this week as well. We've got the RBI policy again coming up, and a lot of focus globally also shifting to central bankers and the way forward. Just run us through the domestic factors as you see them.
Yeah, I think insofar as the RBI's monetary policy is concerned, there is a consensus that the RBI will not reduce repo rates this time around. The RBI would wait for the budget numbers to get crystallized, because there is a section in the government that believes that one should relax the fiscal consolidation plan insofar as next year is concerned. Instead of 3.7%, instead of 3.5%, there is a talk that the government should look at relaxing it to 3.7% to accommodate the large increases in 7th Pay Commission recommendations as well as the OROP, and in view of the fact that the nominal GDP growth is nearly approaching the government cost of borrowing. At the same time, there's also a view within certain section of the government that one should soldier on with the fiscal consolidation, medium-term fiscal consolidation plan, because otherwise it sends a very wrong signal to rating agencies and to investors in terms of anchoring inflation expectations are concerned. So I think the RBI policy is more or less, in my opinion, certain that there will be no change, and the reduction, if any, will only happen in the policy meeting that happens after budget. Now, insofar as other central banks are concerned, I think a very positive signal is coming, a kind of a coordinated signal. We saw Mario Draghi last week saying that they would look at, if necessary, increasing the quantitative easing in the March meeting. And then we had seen a few days before that the Chinese central bank pumping in unprecedented liquidity, highest in 3 years. in the markets, and also positive signals from the Bank of Japan. So the whole market is now focused on what does the Fed say. And in my opinion, I think when the first Fed rate increase happened, the market was expecting 3 more increases of 0.25% each before the end of the current calendar year. But now I think the consensus clearly has veered around to the view that at most only 1 increase of 0.25% will happen, and even that will happen only towards the fag end of the current calendar year. So I think there seems to be a coordinated approach from all central banks in view of the unprecedented volatility and disruption that one has seen in the global markets.
All right, fair. A very mixed bunch there. Ajay, from the mid-cap pack, something like a Web of Global saw profits down 70% and a Nilkamal saw profits up 130%. So there was no real takeaway in terms of a broader trend, but a whole bunch of earnings that we continue to track even going ahead today. You just want to get a sense from you on the picture so far, how it's shaping up according to you. Would you still be cautious when it comes to the larger mid-cap space? You have talked about how you feel the recovery cycle is going to take some time to pick up.
Yeah. I think you're right. I think, insofar as mid-caps is concerned, rather than broad-brushing them with one at one go, one needs to look at it very selectively. And I feel that the savage drop that one has seen in the large caps currently make them slightly more attractive than the mid-caps. As and when the FI flows start coming back, the first port of call, in my opinion, would be some of the large cap names, some of the nifty names that have fallen in sectors such as banking, where the first flow would happen. And also, I think as the year rolls on and the 7th pay commission money starts flowing in, as well as the ORP money, 1.1 lakh crores, I think the consumption sector is one where one will start seeing some traction. So companies in the automobile sector, companies like Maruti Suzuki, is something we are extremely positive on with a medium-term perspective, as also some of the consumer durable names and mortgage finance companies are ones where one will start seeing a lot of traction. Insofar as the mid-caps are concerned, I think in the current fall, some of the quality names in the pharmaceutical sector have taken a large beating, and 2 names stand out in my opinion. Results are expected very soon. I think the first name is Glenmark Pharmaceuticals, where we have a medium-term target price of 1186 over the next 15 to 18 months, and there one is expecting a very strong revenue growth of around 38% in the current financial year, and also a strong earnings growth of around 89% in the current financial year. The company has seen a large slew of ANDA approvals year to date, and the same pace should continue also in the next financial year. The other name which has seen a savage beating, not warranted fundamentally in our opinion, is Jubilant Life Sciences, where the company turned around in the first quarter of the current financial year and built upon in the second a good performance in the second quarter of the financial year. There I think our medium-term target is around 570 rupees over the 15 to 18 months period, and we are expecting around a strong growth of around 12.5 to 13% CAGR in revenues and a strong earnings growth to follow. The other sector in mid-cap where we still feel there is some value is some of the engineering names like Cummins India, where we are expecting a strong 18% growth in the revenue in this year, followed by around 13% next financial year, and earnings growth of around 25% this year, followed by around 17 to 18% next year, where we have a price target of around 1172 in the medium term. Hexaware Technologies in the mid-cap IT space is also a name that we like, with a target price of around 300 in the medium term. There again we have a 16.5% to 17% growth in earnings expected CAGR this year and next year, and a stronger around 21-22% growth in earnings expected this financial year.
Okay, a couple of other earnings on our radar today. Ajay, GCPL, we've got Power Grid, some of these FMCG names, we've been seeing them also deal with constant pressure, but GCPL has managed to maintain its margins. What's your view on that front?
I think I have not seen the numbers, so won't be in a position to talk. But on the FMCG front, I think we have upgraded ITC from a reduce to accumulate, because we believe that the volume, although the volumes have sort of softened, the worst in our opinion is behind us insofar as the volume growth is concerned, and the company has been able to maintain its margins in a very challenging situation. The only risk to the call, in our opinion, is if there's a significant increase in the excise duty in the budget. Otherwise, I think the valuations are very attractive even when you compare it to mid-cap FMCG names, and one can look at accumulating ITC with a medium-term perspective.
All right, that's the FMCG pack. When you were also talking about exports, Ajay, and how that we all continue to see contraction there. We've got the shipping industry also in focus today. They're also looking at, in terms of when we're talking about trade, looking at further reservations on that front. We have, it's again a slow-moving sector, of course, but in terms of another theme, possibly, particularly on the mid-cap front, what's your outlook when it comes to the shipping pack? When you're talking about other larger transport space, Manas earlier was talking about aviation as well. So let's get your thought on some of these pockets.
Yeah. I think we are positive on the logistics space, and All Cargo Logistics is a company we are very positive on. We believe that the company sort of will post a very decent growth both in top line and bottom line over the medium term. And we have a price target of around 211 in VRL Logistics. We are expecting its return ratios to improve significantly over the medium term. The other company on the logistics front we are positive on is VRL Logistics, where again we have a price target around 530 rupees over the medium term. The company is expected to post around 13% CAGR in top line over the next 2 years, and a stronger 18 to 19% growth in earnings for the current financial year. In aviation space, I think I think the numbers that came out insofar as SpiceJet are concerned are quite positive, and we continue to remain constructive on the aviation space.
All right, so those are some of the picks coming in from both Ajay and Manas today, and some of what we're watching out for as well going forward. All right, in terms of some of the other pockets of the market that we continue to in fact look at, Ajay, everyone's been kind of trying to figure out what the next sort of driver will be going forward. We have been talking about some themes, we've been talking about mid caps or select names, but but going forward, would you actually be waiting for the banking pack to pick up? Would you be betting on, for instance, those crude prices remaining at lower levels? What really will you be eyeing in terms of key trigger points that could possibly lead to some amount of bounce back in particular segments of the market?
I think the one point is stability in the global markets, and we spoke about how there seems to be coordinated action among the global central banks to ensure that they tamp down on the volatility and send a signal that they are there insofar as liquidity needs are concerned, if need be. Also, I think the fact that I think both on the steel front and the oil front, some sort of cutting down of excess inventory, excess production, the early signs of that sort of are there on the anvil. I think we are around a month away from the most important date in the Indian financial calendar, which is the Union Budget. And although the last two sessions were a clear washout, my own feeling is that this time around, I think there would sort of be hopefully there will be a breakthrough insofar as some of the key economic legislations are concerned. The government is making vigorous attempts to reach out to the opposition, and three bills in particular I think people would be watching out very closely: the GST bill, the bankruptcy code, as well as the real estate regulation bill, and whether the parliament is able to, both the houses are able to clear these bills. Now, insofar as bankruptcy code is concerned, because it's a money bill, only the Lok Sabha has to clear it, and the clearance of that bill also will send a very positive signal insofar as the banking sector is concerned. I think, as I mentioned in the earlier part of my comments, the concerns were overblown insofar as the 150 accounts are concerned, and the access results clearly bear it out. So I think the budget will be the key trigger that the market will watch out for, in my opinion, for a medium-term trajectory of the markets.
We still got Ajay and Manas with us as well. Ajay, so let me also get your perspective in on the commodity pack, given also what we're hearing from the latest set of reports. What's your outlook?
I think we would still wait to see some of the production cuts to actually eventuate in the industrial commodity side for us to become positive on the ferrous and non-ferrous names. Insofar as global cyclicals are concerned, we are advising investors to stay away at the current juncture. But insofar as domestic cyclicals are concerned, be it autos or be it cement, I think one can start sort of looking at some of the good names out there. So names like Maruti Suzuki in the auto space, as well as Bharat Forge in the auto ancillary space. And on the cement side, I think Ultratech Cement as well as JK Lakshmi Cement are the ones that we are advocating investors to look at to add with a medium-term perspective.
Fair enough, gentlemen. Thanks so much for joining us this morning and sharing some of those strategies with us. Just about a minute or so to go before we